It looks like the 14-year love affair between the Federal Reserve and the stock market is over. Stock market is not taking this breakup well. The question now is, who gets the kids? Bitcoin. The U.S. government and Treasury should buy as much Bitcoin as they can or that they're allowed to, because one day shortly they may realize they're both based on the same thing, confidence. The Federal Reserve may end up being right about this inflation being transitory, but for all the wrong reasons. And when it comes to housing, much to my surprise, a little bit more inventory out there, and it looks like this transitional period to a higher interest rate environment is being digested nicely by the consumer. Welcome back to This Week in Mortgage, everybody. My name is Sam Battaglia, your mortgage broker here at Guaranteed Rate in Beverly Hills, right on Cannon. I hope you're having a great week. I don't need to tell you this, the stock market's in a bad mood, but I am going to give you the numbers. Dow Jones down 15% off its all-time high, definitely correction territory. NASDAQ 30% off its all-time high. That's deep into bear market territory, which is at 20%, and it's down 30%. Here's the interesting one. The S&P 500, as of close of markets today, down 19%. Technically speaking, down 20% is a bear market. The next few days might be really interesting setup here to see if the S&P does indeed remain in correction territory and bounce off of being in bear territory, or gets entrenched just like its sister, the NASDAQ, deep into bear market territory. Oil, I'm not going to comment on it, but it is steadily staying above $100 a barrel. Gold, the traditional flight to safety and quality, still sits near all-time highs. And Bitcoin, which is down 53% off its all-time highs, I think will be the big winner, as I mentioned, when this is all said and done. And the 10-year Treasury, what I watch and look at every day, deeply is down from a high of 3.18 on the yield to about 2.85 today, which is definitely taking the rough edge off of mortgage rates. Now here's the deal with the stock market. Traditionally, we've seen these V-shaped recoveries with the stock market. When it goes down fast, it goes up just as fast and sometimes faster. The deal right now is this is not a V-shaped sell-off. This is a very orderly sell-off that has happened over the course of the last 2 months. So for it to get back to where it was, it's going to take probably double or triple that time in a very healthy environment, which it does not look like it is right now. So the odds of a V-shaped recovery for stocks go down every single day as it just kind of trades down or sideways every single day. And what we've seen on these big up days is essentially a technically speaking dead cat bounce when you look at the charts. People are just selling into strength right now in the stock market because fear begets fear and selling begets selling. So we'll see how the markets do, but keep an eye on the S&P 500 over the next few trading days. That's going to be a big tell to where the markets are headed. All right. I talked about Bitcoin and the U.S. government and the Treasury, and I believe that our government should buy as much Bitcoin as they can because Bitcoin essentially is an algorithm that is based on confidence. Our economy is essentially a major algorithm when you put all the pieces together, also based on confidence. Bitcoin can also be the hedge of inflation that the government's looking for. So if they get all the Bitcoin in the world, not peg our dollar to it and just put it away in their safe, it should be a nice play at some time in the future to hedge out against inflation. Because as we all know, 10 years ago, you could get one Bitcoin for $1. Now you got to pay $30,000 for one Bitcoin. If you can come up with a better hedge against inflation, please be my guest. All right, Bitcoin itself, a little bit more about it. Very interesting thing. It's an algorithm, as I keep saying, based on confidence. But this algorithm has a market cap of $575 billion. This market cap, if Bitcoin was a publicly traded company on any of the exchanges, would actually have the 8th largest market cap in the world for any publicly traded company. I would say that this algorithm that no one's ever touched or seen, for it to have a $575 billion market cap, while it's down 53% off its highs, and today it sits roughly as the 8th largest market cap equivalent company in the world, I'd say Bitcoin has a future value that has yet to be unlocked. All right, moving on to our Federal Reserve. They do a good job, but their job is not easy, and it might be time for them to pump the brakes. Like I always say, Mike Tyson said, everybody's got a plan until they got punched in the face. Federal Reserve came into this year with some big plans, and then a bunch of stuff happened, and they're trying to keep the course, but they may be forced to get off course just to save the economy at some point here. But they have put out a couple of trial balloons, and I don't think the market really cares. I think the market's kind of over the breakup of the Fed, and they're going to go look for a new friend to spend their time with, because the Fed's not there throwing a lifeline right now. So the Federal Reserve is probably going to play into the hands of the slowdown in the economy more so than raising rates into the slowdown in the economy, and they might just have to pump those brakes. And inflation, as we know, is the Federal Reserve's number one priority right now. A long time ago, well, a year ago or so, they said inflation was transitory, meaning it's just going to stick into food and oil and not spill over into the rest of the economy. But it has spilled over into the rest of the economy, and maybe this is why. Publicly traded companies, private corporations, whatever it may be, keep passing these costs on to the consumer. At some point shortly here, if it hasn't happened already, the consumer is going to push back. The consumer has the ultimate pricing power, and the consumer votes with their pocketbook. Now, what's going to happen here is the companies are going to keep pushing the envelope, see how far they can push the consumer. At some point, the consumer is going to say no. You're going to see sales for goods and services slow down, and in turn, you're going to see the stock market go down, because that should be based on earnings most of the time. And if we get back to a normal place where it is, these companies that won't be able to pass on the inflation to the consumer will have to eat it, and their earnings will go down. So we'll see how the Federal Reserve does here, but I got a funny feeling at some point in the next 3-4 months, they might say, hey guys, we're going to chill out. We think we've done enough. We haven't hit our target, but let's see what happens. We'll go back to our target, but let's see what happens. And I certainly hope they do this, because it's very difficult to raise rates into a squeezed consumer. And the housing market, affordability. So, much to my surprise, it seems like there's a little bit more inventory out there right now. And I think, oddly enough, it's counterintuitive. Maybe these higher rates have gotten some of the sellers off of the sidelines, because they might be nervous about the fact that they might not be able to get the top dollar for their house anymore, because affordability is being put into question right now with higher interest rates. So we actually are seeing a slight uptick in inventory, which is very interesting to me. And this transitional period that I mentioned for interest rates in this new environment seems to be digested very nicely by the consumer on a needs-based basis. So what we're seeing is houses being listed, a few more than usual, longer days on the market, and then price reductions. And all this tells me is that the real estate market is normalizing, because in my opinion, I'm at this over 18 years, when my clients are competing against 18 other offers on a house, with half of them being cash and a third of them being 10% over the list price. That's not really a normal market, and that's not really a fun market to buy in, or necessarily a fun market to sell in, because how do you know of the 15 offers, 20 offers you've got that you're taking the best one for your client and advising them the best way? Kind of creates a little bit of confusion, in my opinion, when there's that much activity. So, things will slow down, but slow doesn't mean bad. Slow might be a new word for sustainable and normal, which would be a very welcome thing when it comes to today's housing market. And as always, my favorite part of the housing market, mortgage market's safe. Rates are up a little bit, but there's banks willing to lend money. There's financial institutions willing to lend money. There's non-traditional banks willing to lend money. And they've got a buyer for it on the secondary market. So from that perspective, there will not be a crash, because inventory still is tight and the mortgage market is very healthy. Okay, everybody, that is my show for this week. I hope you enjoyed it. If you have any questions about your mortgage or anything real estate related, please don't hesitate to reach out to me. Thank you as always for watching, and have a great rest of the week.